everyone, welcome back to Mindful Investing. Today we are going to talk about something very interesting. I studied all the stocks inside the Fundstrat GRNY Shorts US Large Cap Equity ETF. This fund is managed by Tom Lee, who is a very well-known portfolio manager and also the head of research at Fundstrat. The reason why I am doing this is because I like their strategy. It is very disciplined, it is rules-based, and I feel there is a lot we can learn from it. So I thought, why not compare their portfolio with my own stock prediction model and see what lessons we can pick up. So in this video, I'll explain what this GRNY Shorts strategy is. I'll show you their current holdings, what they recently removed, and finally compare it with my own portfolio and my model. My request is watch this with an open-minded because this is purely educational. And at the end, I'll share which stocks I plan to add or remove in my portfolio after doing this exercise. Alright, before we jump into the stocks, let us first understand what exactly this GRNY Shorts strategy is. The name GRNY Shorts comes from basketball. You might have seen an underhand free throw style called the GRNY Shot. It doesn't look flashy, but it is effective and increases the chances of success. In the same way, this portfolio is built in a systematic, disciplined manner. It may not look very fancy, but it is designed to give consistent results over time. Now, let's see how they select stocks. They have identified 7 different themes. A stock has to qualify in at least 2 themes to be included in their portfolio. Right now, the ETF has about $2.5 billion in assets, so it is big and serious portfolio. I will leave their website link in the description for you to explore in detail. Now that we understand their approach, let me show you what I did with their holdings. I pulled all their current holdings, that's about 39 stocks, and ran them through my own stock prediction model. In the spreadsheet, I have put down the current price of each stock, 1 year and 5 year price targets from my model, their current PE ratio, long-term and short-term valuation signals, and whether the stock shows a 1x, 2x or more potential. To make it simple, in the 5-year column, anything that has more than 2x potential, I have marked them in green color. In the 1-year column, if the upside is more than 20%, again I mark them in green color. Moderate returns are in yellow color. This way, at one glance, we can clearly see which stocks look like strong buys and which ones are more like hold for stability. Alright, now let's move on and compare their portfolio with mine. I think you'll find this part interesting. Some of their strongest names are also in my portfolio and I'll share the results with you. I hold AMD and I'm currently up about 46% on this. My model shows strong upside in 5 years, so I'm confident holding AMD. The next one is Broadcom. Here I'm up more than 99% in just 8 months. I've said it many times, Broadcom is a money machine and it will continue to do so. The next up is NVDA. I'm up 43% on this and both my model and Fundstrat see it as a very high conviction stock. The next up is Amazon. I'm up 19% here. And then we have Google. I'm also up 47% on this position. And next up is Lam Research where I'm up 54% on this. These are all the common holdings we have between my portfolio and Fundstrat. Now, one stock I sold was Palantir. I had only 2 shares and I sold after hitting the 100% gains. But based on my model, I think if we get a pullback, I should re-enter because it still shows strong long-term potential. Okay, that's the overlap we have. Now let me highlight a few other stocks from their list that stood out in my analysis. Some of the names that my model also flagged as very strong, more than 1x potential in 5 years are Meta, Microsoft, Monster Beverages, Robinhood and Tesla. These are the kind of names where you can really compound wealth if you are patient. I've marked all these in green on my sheet and I'll share that with you in the description so you can explore on your own. Now, not every stock is a big compounder. Some are there simply to balance risk. Let's talk about those. Fundstrat also holds some conservative stocks like Costco and Caterpillar. In my model, Costco shows only about 54% upside in 5 years and Caterpillar shows 55% upside. So I marked these as hold. Now, why would they include these if growth is limited? Because when the market falls, these type of companies don't drop as much. They act as hedge to balance high beta names like NVDA or AMD. Another important thing to notice is which stocks did they recently exclude? They removed 5 stocks starting with Abbott Laboratories, FICO, Intuitive Surgical, Progressive, and PayPal. From my point of view, FICO probably came out because of government scrutiny and noise around their business model. Intuitive Surgical is showing less than 1x in my model, so maybe that's the reason they removed as well. PayPal is interesting because my model still shows good upside, so I need to dig deeper into why they dropped it. Maybe fundamentals or maybe competition concerns. Okay, so what did I learn by comparing their holdings with my model? Number one is rules based approach reduces emotional bias. They stick to their 7 themes and cut stocks if they don't fit anymore. Number two is they balance growth and defensives, something individual investors often forget. Number three is whenever my model and their picks overlap, it increases my conviction. Like in Broadcom, AMD, and NVDA, the signals align. And number four, it's okay if some stocks are not shooting stars, some are there just to keep stability in my portfolio. Now, based on this study, what am I personally changing in my portfolio? Let's see. I plan to add Robinhood, Palantir, Netflix, and Palo Alto Networks. These show strong upside in my model. I may remove or trim some underperformers that don't meet my 2x criteria, and I'll keep Costco and Caterpillar as hedges because even though they don't give big returns, they protect the portfolio in bad times. So, what should you take away from this? The main lesson is always have a framework, whether it's your own spreadsheet like mine or a rules based system like Fundstrat. You need discipline. Only buy what fits your framework. I'll share my spreadsheet link in the description below. Explore it, study these stocks, and see what you can apply to your own investing style. Now, I want to hear from you. Do you hold any of these 39 stocks? Which ones do you like the most? Please share in the comments below. And of course, if you enjoyed this analysis, do hit the like button, subscribe to Mindful Investing, and don't forget to press the bell icon so you don't miss any updates on my portfolio journey. Thanks for watching, and I'll see you in the next one.